Well, if you were hoping for some relief from your credit card rates or a lower mortgage, you're going to have to keep waiting. A divided Federal Reserve held interest rates steady yesterday. Now, this is the second rate decision under Kevin Warsh as the central bank's leader. 3 Fed presidents dissented, voting for a rate hike to tackle stubbornly high inflation. Warsh says he hasn't lost sight of that goal.
The committee remains resolute. We will deliver price stability.
Now, it's been a consistent message from the Warsh-led central bank. This was the chairman speaking to the Senate Financial Committee just 2 weeks ago.
The members of our committee have no tolerance for persistently elevated inflation, and we share a resolute commitment to ensure price stability.
Now, despite that, inflation remains well above the Fed's 2% target. CBS News Money Watch correspondent Kelly O'Grady is here to explain what this all means for us. Kelly, good morning. So we just heard from Kevin Warsh, this split decision by the Fed, and he's promised that we would see some change addressing inflation. Were you surprised we didn't see rates change?
I'm not. There was a 64% chance going into this meeting that you were going to see rates hold steady, which is exactly what happened. Remember, this is a 12-person board. You have to have a majority to make any kind of change, lower or raise interest rates. 3 folks voted to hike by 1/4 percentage point, right? So it does tell you that there is some division. And the more that I'm talking people, it's becoming not whether we hike rates, but when. September is sort of circling in on where we're going to see that, especially if energy prices continue to rise. Anything can change. But I think what the Federal Reserve is trying to do is they don't want to hike too late, but they also don't want to hike too early, because consumers, right? None of us want higher interest rates when a lot of people are already struggling.
And speaking of that, so many people are just waiting for prices to drop. Did Kevin Warsh give any indication of when we could see a change that will address inflation?
So he actually has been very staunch about not wanting to message that, because remember, the Fed can't just snap its fingers and say everything's good. They're reacting to things like a war with Iran, changes that the administration is choosing to do or not to do. So they have tools that they can do to manage it all. But he basically said, we're going to get to 2%. Inflation is too high. And I thought this was very interesting. He specifically said the Fed will not hesitate to act if necessary, meaning he will hike rates along with the rest of the Fed if they need to.
Kelly, I also want to talk about this yesterday. Not a great day for Wall Street.
No.
What do we know about these losses?
So it's a couple of different things. One, that possible September rate hike after that press conference that Warsh had, investors were going, oh boy, okay, it's about to get a little bit more expensive maybe to borrow money. The other 2 things, oil prices are surging, but also artificial intelligence. You have 4 of the biggest tech companies reporting earnings yesterday and today, and there is just this collective investor anxiety that these companies are pouring money into developing AI and they may not be able to turn a profit. You saw chip stocks really take it on the chin. And of course, if you looked at your 401k, it wasn't great yesterday.
Right. Well, Kelly O'Grady, thanks for breaking things down for us.